Good afternoon. Welcome to the August 20th, 2021 version of News from the Front Lines of Business. We had a little issue here with some weather out in the Philippines, so our assistant is not going to be with us, Aldrin. Prayers go out with him as he's dealing with his cleanup from a little flooding issue, but we're going to do the best we can to get through this with just me. So anyway, here is our presentation here for the week. Fun with numbers, so I guess we'll start with the fun stuff first before we get into the not so fun stuff. The number for this week is 64.81, and you'll see the graphic is NFL comparison of beer sales and stadiums out the country here, and see the New Orleans Saints are at the top, which is one of the reasons why I had to get rid of my season tickets a few years ago. Because when $55 per seat ticket in the section we were in, plus $60 or more worth of beer, gets to be a very, very expensive outing there. But yeah, here clearly, at $4 and some change ahead of the nearest competitor, that's pretty impressive. So I don't know how much that is attributable to bad prices on the beers, because $10 a pop that sneaks up on you pretty fast, or quantity of beer, but I suspect it's a combination of the two. Anyways, that's your fun number, so we're good at something there. All right, so for news, the 3 things that have come up over the course of our discussions with clients this week that we think you can use is the discussion of the home office for business. So we got some, some additional considerations there. If you're operating a business as a sole owner and you are working out of your house, there's some write-offs that you may not think of that, or in addition to the utilities and that sort of thing. So we'll chat about those a little bit later. Of course, it's IRS Notice season, so you're probably seeing a lot of stuff in the mail. It's some is good, some not so good. You just got to deal with it. And on rental real estate, there's a discussion here with a client. It's a strategy I haven't seen very much of lately, but it's probably worth revisiting. Dealing with the rental of double property, so it's a residential rental that's a double. So with that, we'll kind of start going into some details here. So home office benefits. So we know about all the more obvious deductions, right? So when you're operating a business and you have your office in your home, we always know that there's a certain percentage that's going to be allowed to be taken for percentages of utilities and repairs and maintenance for that space that you use as an office. But another lesser known deduction that's allowed is related to your automobile mileage. So when your office that you primarily operate out of is inside your home, even if you have another location somewhere else in another office rental space or something like that, you're gonna now the auto mileage becomes more deductible. So ordinarily, commuting back and forth to work is not a deductible expense. But when the office and home is your home, now as soon as you're out the front door, you're driving for business purposes. These are one of those expenses that we really like from a tax planning standpoint, because it's gas money you're spending anyway. That now is going to allow you to deduct some of the cost. So, so anytime you got money that's going to be spent one way or the other, getting back and forth, and you can now make it deductible versus not deductible. We like that. So get in touch with us about how to use your office, this office and home deduction, because it's a lot more valuable than some people may think initially. And I think originally, a while back, it used to be a very high audit risk, and people were very concerned about that, but that's not the case anymore. It's very common, and it's a legal deduction, so you should take it. All right, it's notice season, so I just threw a couple pictures of the post office and generally frustrated person. That's pretty common. I don't know what is the deal here. So we've talked in previous videos about how bad IRS is right now processing mail and that sort of thing. So it's very slow to deal with anything you send in as a response. But it seems like the computers are spitting out penalty notices and just all sorts of letters that sometimes are erroneous, and sometimes you can't get them fixed easily or quickly because the phone support's pretty much non-existent. The web access requires all sorts of identification that sometimes is very difficult to accomplish successfully. So you're left with just a very aggravating, slow process. But so just know if you do get some oddball notice about some weirdness, it could be going back to this prior year, the things with the retention, the different stimulus payments and how they affected your tax refund. There's all sorts of things, and we started to see them come out in an increasing amount lately. So let us know if you receive one, and we can kind of work on it for you. But just know it's going to be an aggravating, slow process, even more so than normal. All right, this other last topic is a little bit more fun here. So a client came in who's active in the real estate sector here. He has a lot of properties. He fixes them up and sells them, and does a lot of flipping, as that's known in the business. But another strategy, and as we're kind of talking about how we trying to get our kids involved and kind of have them learn what we've seen from other successful investors. And this is something I hadn't seen done as much lately as in the past. But it involves these doubles. So definitely in the New Orleans area, it's very common. There's these shotgun doubles and party wall doubles and whatnot. And typically they're in the lesser expensive neighborhood. So if you're just starting out and you can't swing a $400,000 mortgage, some of these houses you're going to find are in the $150,000 range. And so it's, if you've got a job somewhere, in most cases I think it's an attainable mortgage. But for these doubles here, they're lower in price, so but they still command a decent amount of rent. So at least locally around here, a half of a double will generate $900 to $1,300 or more of rent, which corresponds very nicely to the mortgage payment. So for people who are trying to build up their equity in real estate and kind of figure out some tax advantage growth strategies, it just makes a lot of sense. Because once you have a property, there are deductions that are allowed for different depreciation expenses and things of that nature related to the property that you'll be able to utilize. But when it works out like it does in a lot of these cases, you could live in half of it, rent out the half, and granted it's work, so don't, I guess be lulled into some kind of sense that it's going to be easy, because it's not. Dealing with tenants is not always fun. However, there is a trade-off, because typically that rent payment will cover the mortgage. So you basically go living in half, renting it out and getting somebody to basically pay your mortgage, when in the meantime you're building up equity. You're getting some tax deductions along the way for things that are related to the property, and not a bad way to get things started. So anyway, so that's a thought that came, because it did come up at a discussion today, and how a young person that's kind of just trying to get their portfolio started, this is a pretty solid way of getting it going. So anyway, so that's pretty much it for this week, guys. So that's it for this week's news on the front line. So get out there and have a good weekend. I'm sorry, it's Friday already and it's over. So have a good weekend, and we will see you back here Monday.